Okay, so that's the word coming in, but let's continue the discussion regarding festive season and what's the expectation. Mr. Abhishek Kapoor, the CEO at Puravankara, joins us on the show now. Abhishek, hi, good afternoon. Thank you so much for making time and speaking with us. And first up, many greetings for Dussehra to you and your family as well. Wanted to understand from you first up what kind of demand environment you are seeing on the ground and how long do you think it is going to continue, because over the last 18 months we have seen quite a bit of traction already.
Thank you for having me on the show and wish you all a very, very happy Dussehra and season's greetings. I think this is a start of the festive season. We have good 6 months to go in the financial year. I believe the past 6 months have only strengthened the belief, and we are seeing a consistent increase in demand. Festive season, of course, being where every time and every year after year, irrespective of what kind of year it is, we see increase in demand. And we are seeing this sustained demand because of multiple reasons. One is, of course, the fact that during pandemic, people realized that they must own homes. The arbitrage between the rental and the interest rates came down significantly. And of course, the real estate price appreciation that continues as a trend. Other than that, I think increased economic activities is going to continue the sustained demand that we are seeing. And very interestingly, we have had some change in age profile of customers who are buying. I mean, millennials are pretty much back in how. So we are seeing a lot more demand. In fact, the demand percentage-wise, not just in absolute numbers, has gone up almost twice for the millennials. So I think there are multiple trends that are emerging, but we see this trend continuing and further consolidating. And of course, you will see more demand coming in.
Right. Interest rates have started to go up. Yes, it's a very small component now, but when you have a big hike, which we are seeing after every RBI meet, the MCLR rates, the home loan rates go up, what sort of impact does it have? Also it, takes the EMI into account, which definitely would be pinching in. So how would you look at that?
See, there are two parts to this story. One is the affordability. See, if you look at the current household savings going into real estate, which traditionally have been between 50 and 55%, today that is around 45%. So there is a headroom over there. The second is that the increase in salary levels in general, a household income, has, even if you assume to the extent of 12% average from the previous year to this year, and you factor in the increased interest rate, the interest EMI cost has not really impacted to the extent where it cannot be taken care of. There is still a headroom there. The third, I think, is customers have become extremely intelligent in the way they look at their EMIs, their term loans, their home loans. So what happens is that really in a purchase cycle of a customer, he knows that there will be cycles. They need to manage their EMIs, and a whole lot of people have become far smarter. And in fact, banks give great amount of flexibility in managing your tenure, EMIs, step up, and so on and so forth. So I think there is a lot of flexibility. And of course, developers also bring in that flexibility further for the consumers to continue to buy. So at this point in time, while I understand, and it is in fact going to be a concern if this continues for more than 6 months and further increases continue, we may have to watch it carefully. But having said that, at this point in time, we are seeing pretty much no impact of these increases. But yes, I would agree that we should keep an eye on this maybe in the April quarter next year.
I don't know, sir, if you track the US mortgage markets, but, there people, of course, take 95% loans. And, a $600 EMI has become more than $900 EMI. But in India, can you just tell us what is the average mortgage? I mean, 40%, 30%, 50%. How much is the average mortgage? And that's why it may not pinch so much?
Look, in India, typically people borrow somewhere between 75 to 80% of their purchase value from the loan from the banks. Now, if you just do the math, and I'll just take you through the math for a minute, somebody who's bought an apartment, which is say 1 crore worth an apartment, and taken a loan of 80 lakhs, his household income typically for a 1 crore apartment will be about 2.5 lakh rupees a month. And EMI would be, say, earlier would have been at the range of about 75,000 rupees or so. Now, if you increase his salary by, say, 12% and it goes to 1 crore 12 lakhs, his salary goes up from 2.5 lakhs per month to almost about 3 lakhs. Then if you factor in the increase in EMI, the increase in EMI will not be more than, on a 80 lakh rupee loan will not be more than 12,000 rupees. So obviously per month. Now there is a huge gap between what the salary increase was versus what the actual EMI payout is. So if you look at the actual impact of the EMI increase in the current environment, it is not so significant because, of course, mortgage rates have gone up significantly in the US versus in India. If you look at it, it's not gone up that significantly. We were at about 7.15, 7.2. Today you are at, about 8.5. So, you have not seen that kind of impact, and we have always been used to of this kind of EMI. So in that sense, I don't think the sentiments have been much impacted. Of course, in the US is a very different situation.
Okay, and also wanted to get your sense in terms of the entire pricing, etc., as well, which is playing out. I'm sure a lot of companies have taken price hikes over the last 12 months on account of the raw material prices. Is the worst behind, or are there more price hikes on the anvil? And what does it mean for your margins with the commodity prices coming off a tad bit?
Look, as far as the commodity prices are concerned, I think that is kind of stabilized, and the price hikes that have been done in the past have pretty much secured the margins. But going forward, because of the demand-supply gap, I will estimate that you will continue to see some kind of price appreciation, and that could range between 5 and 10%, right? And that will definitely help developers to improve their margins. In fact, I believe that cost of finance and overheads and operational efficiencies because of scale, now that the consolidation is there, will also help improve the margins. So I believe that the margins will improve, the prices will appreciate, at least from what we see for next 6 months.
All right, sir. Thank you so much. Interesting conversation, and congratulations to you and your entire team, for the festival greetings. Let's go across now to Sharath. He's